Yeah, private markets is extremely important for us. But if I focus on private credit, because that's where we specialize, it's a mission critical area. We have a $60 billion platform, so we are at scale.
Hello from Frankfurt. We're here at the FundView Media Day 2024, having a discussion with several CEOs about the asset management industry. Onur Erzan from AllianceBernstein, taking part in the discussion. Hello, nice to have you here.
Thank you very much. Thanks for having me, and glad to be back for the second year.
We talked in the discussion about the asset management industry having maybe an identity crisis. What's your opinion on that? Does the asset management industry have an identity crisis at the moment?
Well, I think the right way to answer the question is whether we are looking at it narrowly or in a broader sense. If you look at the fundamental long-only equity strategies for developed markets, yes, the active managers have underperformed in the current market cycle. And as a result, that's definitely triggering some pressure on active managers. That being said, I think there are different ways the active managers can be very relevant to our clients. If you look at, for instance, fixed income, that has been an area where with the higher rates, active management is adding a lot of alpha. On top of that, obviously, there are very different ways we add value to our clients as active managers, making the product more accessible through different wrappers, bringing the price down so that the net performance is enhanced, and providing the education in terms of portfolio construction and how to enhance the broader outcomes, whether it's retirement readiness or income. So from a broader perspective, I don't believe it's an identity crisis, but it's also evolution of the industry to keep up with times.
You're based in the US, so what investment trends do you see globally, and especially do you see differences between the US and Europe?
I mean, there are a lot of trends that are common. However, if I were to focus on what is a little bit different or accelerated in the US, I highlight maybe three areas. One, the adoption of alternatives has been faster in the US. I know we're going to come back to that topic. So alternatives are becoming much more mainstream in the client portfolios, not only on the institutional side, but also in the retail side with the new vehicles. That's one, I think, big trend. Second, in terms of evolution of vehicles, that has been faster in the US. Obviously, we have seen now active strategies in ETFs, but also the SMAs, the separately managed accounts, are widely used at the retail level, and customization is possible. So there's been a lot of innovation around the wrappers to access the products. And then the last one is around the client segments. We've seen enormous innovation at the intersection of insurance and alternatives, how insurance balance sheets have evolved and how there has been a convergence between insurance companies and asset managers. I think that's also a little bit accelerated in the US.
And how are you positioning your own fund platform at the moment? What asset classes are maybe in the focus currently?
Sure. We have, our ambition as an asset manager is to be one of the select preferred partners for our large clients, whether it's the intermediaries or the institutional investors that we work with. All of those large clients want to do more with less managers. So as a result, we want to be relevant across our platform versus in a small niche category or two. Hence, we continue to invest in many parts of our platform. But on the fund side, the areas of focus are, one, we added new systematic fixed income capabilities to broaden our fixed income solution set. That has been definitely an area of focus. In our equity platform, we added a new European-based global and European growth team. Actually, Torsten Winkman also resides here in Frankfurt. So continue to add best-in-class teams from the industry, including European teams, to have that global reach. And then finally, in terms of the solution set, now our active ETF range is 15 products. After 2 years, we hit $5 billion in assets. So we're happy with that evolution as well.
And how important are the private markets for you, and especially for your family office customers?
Yeah, private markets is extremely important for us. But if I focus on private credit, because that's where we specialize, it's a mission critical area. We have a $60 billion platform, so we are at scale, and we have different aspects of credits in our platform, all the way from direct lending to real estate debt to specialty finance. And we create the right solutions for the right channels. For family offices, it's typically the more traditional lockup or drawdown funds with high return profile or consistent income, depending on the family's needs. But also for other channels, different wrappers, including the perpetual semi-liquid structures that will democratize the access to private credits also in Europe.
Thank you very much.
Thank you.